We all hate taxes. Nobody enjoys paying taxes. Imagine going to work from 9 to 5 or clocking in all the hours, and at the end of the month, the tax master comes that, hey, mate, give me 20% of that or 40% of that. It feels unfair. Even God, who created the heavens and the earth, requires just 10%, but the tax master requires more. It's even difficult for those who do not know what these taxes are being used for. It almost feels unfair. So some people do not want to pay and so end up in very difficult circumstances by evading taxes and sometimes even suffer jail term. It's even worse for those of us here in the UK where we pay all forms of taxes from income tax to council tax to even black taxes. Well, I've said it, yeah. But in this video, I'll be explaining to you some tax benefit that you may be entitled to if you are married or you are in a civil relationship. Stay tuned. Hi, and welcome to Diaspora Careers and Investments. My name is Shadrach, and in this video, I'll be explaining to you two main taxes that you may be entitled to if you are in a civil relationship or you are married. The first type of tax benefit that I'd like to talk about is the marriage tax allowance. Here in the UK, everyone is entitled to a personal tax allowance of about £12,570. This is the amount that you do not pay any taxes on. And so if you earn about £1,047 every month, then you're not supposed to pay any income tax. But if by mistake you paid any taxes on this, at the end of the tax year, you'll get a tax refund or a tax rebate on this. Now, this is how the marriage tax allowance works. The marriage tax allowance allows you to transfer 1,260 of your personal tax allowance to your spouse if they earn more than you do. Remember, it is 1,260 of your personal tax allowance that you are transferring to them and not 1,260 of your salary or of your income that you are sending to them. This means that at the end of the day, your spouse who earns more than you do would have higher personal tax allowance. It means that they get more money that is not taxed. And so only a little proportion or a little fraction of their income will be taxed. And so you get more money in your pocket because more of your money has not been taxed. And this works out to be about 252 or 250 pounds, depending on the tax year we are looking at. And I mean, it's not a lot of money, but 252 pounds, it's not that bad. It can buy you a pair of sneakers or something, you know. So I think if you are eligible, then you must apply for it. But to be eligible, you must meet these criteria. 1, you must be married or in a civil relationship. Cohabiting or having a fiancé doesn't work. You must be married or in a civil partnership. Secondly, one of you has to be a non-taxpayer. What that means is that one of you has to earn less than 12,570. And this makes sense because it is of your personal tax allowance that you are transferring to your other spouse. Which means that if you are a taxpayer, if you already, have exhausted your personal tax allowance, then there's nothing to transfer to the other person. So it is a way of allowing, of course, the Bible says that the two shall be one. So that if both of you are not maxing out your personal tax allowances or your non-taxable money, then you should be allowed to transfer some of this non-taxable allowance to your spouse because the two are one. Thirdly, your other spouse must be a basic income tax payer. What that means is that they should not be earning more than 50,270 if they are in England, or they shouldn't be earning more than 43,662 if they are in Scotland. If your other spouse earns more than this, then unfortunately, you would not qualify to apply for this. So in summary, one of you has to be a non-taxpayer and the other person has to be a basic income tax payer to be eligible for the marriage tax allowance. But if your other spouse earns just above 43,667 in Scotland, or in England you earn just above 50,270 pounds, possibly consider increasing your pension pay or your pension allowance so that your basic income, as in your net, actually is below this threshold, and so you will be eligible for it. In addition to this year's marriage tax allowance, you can claim up to the past 4 tax years. So that is from, I think, 2018 to 2019, 2019 to 2020, 2020 to 2021, in that order. but you should have met all these criteria from 4 tax years behind to claim for each of these tax years, or you can simply claim for each tax year that you qualify for. You remember, it is the non-tax paying spouse who has to apply for it. And to apply for it, they will need their NI number or your NI number. So essentially, if you are living in the UK and you are working and you are not earning more than 50,270 in England, or the Scottish equivalent, and your other spouse is at home, they are not working, or they do even some job and they don't earn more than 12,500 in a year, then you would qualify for this and you must apply for it, because 250 can pay the bill for a month. And once the non-tax paying spouse applies for this, you don't have to apply every tax year. It is automatic until they start paying tax. That's when it cancels. So hope this helps. If you are learning from this and you're enjoying this video, kindly remember to like this video so that we can reach more people, or even smash the subscribe button so that you can get updates whenever I upload new videos. I'll put a link to how to apply for this marriage tax allowance in the description box below. Do check it out. It is a straightforward process. Don't go through anyone for them to charge you, because it's not a lot of money anyway, so that there's no point paying somebody to do this for you. I'll put a link to it in the description box below. The second type of tax benefit that I'd like to talk about is the inheritance tax. And I know this is a controversial area with all sorts of arguments for and against it. But for those who do not know, inheritance tax is the tax on the estates of somebody who has passed away. When I talk of estates, I mean, on their savings, their investments, their property, everything they own, minus the debts, of course. After you deduct their debts, whatever they own is taxed. If it's above 325,000, everything they own above that is taxed. It is actually a way of redistributing wealth, because it is argued that if these taxes are not applied, the rich will continue to be rich, because if your father was, rich, had, a lot of property and estates, and you inherit all of these, then by virtue of doing no work, you become a rich person. There are those who argue that, what is the point? I mean, what is wrong with that? Because your father has worked hard, has paid taxes, and so if they've saved all of this and they are giving it to their children, they shouldn't pay any taxes. But there are those who also argue that, of course, it is not fair. So anyway, the politics around inheritance tax is ongoing, and I'm not going to diffuse that in this video. And indeed, there are ways where people, get around it by putting their inheritance in trust. I will do a whole video to explain how to go about this. But one thing you need to know is that if you will your inheritance or your estates to your spouse, you do not pay any inheritance tax. And in fact, you could actually hand over your inheritance tax allowance to your spouse, so that instead of 325,000, it becomes a double. And so that when they pass on, whoever they will their items to or their estates to would not have to pay tax on 2 times 325,000. So anyway, I hope you found this video helpful, particularly the marriage tax allowance and the inheritance tax allowance for spouses. Let me know if you found this video helpful. Do like it and do share it with your friends. If there's any other thing you'd like me to address, let me know in the comment section. If anything is not clear, let me know and I'll be happy to address it. If you know about any other tax benefits for married people which I've not addressed, do let me know. Thanks for stopping by, and my name has been Shadrach. God bless you and catch you again soon.